You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back, everyone. It's that time again, Web3 Wednesdays here on Vocal Technologist. And the world of crypto, well, it's definitely buzzing. Lots going on. Today, we're going to trace some of that innovation, looking at, how the big finance players are getting involved, then maybe touch on some newer ways for you to invest, and finally peek into the future of decentralized finance. Sound good?
Yeah.
All right, let's unpack this. First up, traditional finance. It seems like they're really making moves.
Yeah.
Take Fidelity. They've quietly rolled out this thing called the Digital Interest Token, FDIT.
Yeah.
On Ethereum.
FDIT. And it's not small potatoes either.
Right. Already over $200 million in this tokenized Treasury money market fund. And they're clearly positioning it against BlackRock's BUIDL fund, which has been dominant.
Definitely setting up a rivalry there.
Yeah.
But it's part of a bigger picture, isn't it?
How so?
Well, FDIT slots into this $7 billion tokenized treasury space. You've got Franklin Templeton, Wisdom Tree. It's becoming quite the crowd. And it signals something important. It's about these institutions looking at blockchain to basically re-engineer how things work. Think faster settlements, lower costs. McKinsey's even talking, $2 trillion in tokenized securities by 2030?
$2 trillion. Wow.
Okay, yeah. And Ethereum's kind of central to this, processing 95% of stablecoin volume, 82% of tokenized real-world assets.
So Ethereum's the backbone for a lot of this institutional stuff.
Pretty much. You've even got companies like Etherealize, co-founded by folks from the Ethereum Foundation, and Wall Street vets building that specific infrastructure, talking to banks. The main hurdle, though, often it's just fitting this new tech into old rules, regulation.
Makes sense. That's a huge shift happening almost behind the scenes. But,
yeah.
Okay, it's not just the institutions, right? The public market is seeing some interesting new things, too, like this Rexos Spray DOGE ETF.
Oh, yes, DOGE.
Expected this week. Direct exposure to Dogecoin. BOGE even rallied, 7% just on the news?
Yeah, and it raises that bigger question about crypto ETFs, doesn't it?
How do you mean?
Well, we had Bitcoin, then Ethereum ETFs earlier this year, now Dogecoin. It feels like the floodgates are opening a bit. There's this race among issuers. Someone even filed for a Trump coin ETF.
Seriously, a Trump coin ETF?
Yep, filed. It might just be noise, but it shows how broad this is getting.
So the impact is?
It's really about accessibility, right? Bringing crypto, even the more speculative side, to a wider audience, more mainstream. It also, stretches the definition of what mainstream finance considers a real asset. Raises questions for regulators, too.
You joke, but are we going to see a tokenized pet rock ETF next?
Maybe not that far, but who knows these days?
Okay, so institutions are building, retail's getting new toys. But here's where it gets really interesting, I think. Looking at the future vision. Hyperliquid.
The decentralized perp exchange.
Right, the biggest one. But their ambition is, huge. Not just an exchange, but the foundation for all finance. They're talking about replacing stuff like COBOL.
Yeah, that old programming language that incredibly still runs a lot of the financial world.
And they're launching their own stablecoin too, USDH.
And that USDH part is key. There's actually a bit of a contest brewing there.
Oh.
Yeah, you've got Paxos, Frax, Agora, all kind of vying to be the stablecoin provider for Hyperliquid, each with different ideas on compliance, yield, how it all connects.
Okay, so competition there. But what are the potential roadblocks for Hyperliquid's grand vision?
Well, one big one is who holds the cash behind that USDH stablecoin, the custodian. Right now, Hyperliquid seems reliant on Bridge, which is, smaller regional bank.
Okay, and the problem there is scale.
Exactly. They've already got $5 billion in USDC deposits on the exchange side. If USDH takes off, you quickly need the kind of infrastructure only, like a huge, globally, systemically important bank a GSIB can provide. Think State Street.
Gotcha. So the tech might be ready, but the traditional banking rails need to keep up, or they hit a ceiling.
Precisely. It's that tension between moving fast and breaking things and needing rock-solid, scalable infrastructure. You even see debates about the tech itself. Tempo argues current Ethereum rollups are actually too slow for real-time payments because of settlement delays. It highlights these ongoing arguments about the best blockchain design for different jobs.
So, putting it all together for you listening, what does this all mean? We've got traditional giants wading deeper into crypto.
Yeah.
We've got wild new investment products popping up. And these really ambitious projects trying to rebuild finance from the ground up, but facing some serious growing pains.
Yeah, I think the big takeaway is this. Web3 is definitely pushing into finance, from institutions to individuals like you. But the crucial question, the one to really watch, is how fast the underlying infrastructure can actually mature. Can it scale up? Can it meet security and compliance demands without, losing that decentralized spirit? That's the real balancing act. Will efficiency needs lead to more centralization, or can the decentralized vision truly win out? Something to ponder as you watch this space unfold.
Spoken Tech for your ears.